Hello, everyone. Welcome and thank you very much for joining us today. I'm Greg Harford from the Canberra Business Chamber, and I'm very excited to have with us a great panel of experts today to talk about export finance. We're going to be probing into the various financing options available for those thinking about exporting. There will be time at the end of this webinar for questions, so please do use the Q&A function at the bottom of your Zoom screen there to ask anything that you would like to as we go on. But I'm really pleased to be joined today by Crystal Doyle, who's the Associate Director of Business Development for New South Wales and ACT from Export Finance, Ken Kroger, the Chair of Epicorp, and Gemma Hansen, who's a consultant with Export Solutions. So to begin, I'm going to hand over to Crystal Doyle. Crystal works with SMEs across New South Wales and the ACT, and will be talking about some of the common finance solutions that Export Finance offers to businesses. She's going to talk about working capital lines of credit, term loans, and bid and performance bonds guarantees. So, Crystal, I'll hand over to you. Thank you.
Greg, has that loaded? Just want to make sure it's showing.
Yes, it has. I can see your
slides. Perfect. All right. Hello, everyone. So I'll get straight into it. Export Finance Australia. If you haven't heard of the organisation before, the easiest way to explain it is we are a federal government agency. So we're what's known as an export credit agency. So many other countries also have a similar organisation to us. We've been around for over 65 years now. And in terms of our support for SMEs in the market, our key mandate or purpose is really to support Australian businesses that are selling their products or services abroad. And the way that we provide that support is by providing a range of different debt finance solutions. So important to point out that we are a commercial debt financier. We don't have any grants within our organisation. So we are very similar to a bank, but a niche bank with a very specific purpose to support businesses that are exporting. So where do we fit in the market? We do fill a gap in the market. So we don't actually compete with your traditional banks. We actually work quite complementary with banks. So a lot of our clients will have a bank that supports them for their domestic operations. But what we see is that a lot of Australian SMEs struggle to obtain the finance they need when it comes to their international growth. So even if they have won a large contract or project with a really well-known, reputable organisation overseas, we tend to see that the banks have limited appetite. And so this is where we can really play an important role. Some of the other common reasons why we see businesses struggle to obtain finance can be around if they don't have property security, or if they are not willing to provide property security. We don't generally take property security for our facilities. Sometimes it's also the industry that a business is operating in that the bank may not have appetite. So that's where we sit. We don't compete with the banks. We're there to really serve a role where a business isn't able to obtain the finance they need from a traditional bank. So in terms of the different types of exporters and businesses that we can support, it's important to define these, because I think a lot of businesses don't realize that they are actually deemed an exporter by us. So the obvious one is if a business is selling a product or a service to consumers or businesses overseas outside of Australia. We've got businesses across all industries. So, it can be a tangible physical product, like fashion brands. We have a lot of fashion brands who might be manufacturing water filters, machinery. We've literally got clients doing a bit of everything, but it also includes those businesses that are selling a service. So you might be a business that's providing architectural design services on international projects. You might be a business that provides access to a software platform that you have built and developed. We see that a lot. So that's a direct exporter. What is not so commonly known is businesses that we call export supply chain businesses. So the easiest way to explain this is if you think about Western Australia and a lot of the mining sites, on any of those mining sites, it might be critical minerals that are being extracted and exported overseas. On those sites are multiple different Australian SMEs that are providing a product or service, which essentially enables those minerals to be exported overseas. So, you might be a business that's providing accommodation on that mining site. Maybe you're providing plant and equipment. Maybe you're providing mining software, for example, that's being used on that site. So although you're not directly exporting, you are part of the export supply chain. So those are businesses we also provide finance to. Businesses expanding their physical footprint overseas. We see this a lot. So businesses that have established themselves here in Australia and want to replicate and set themselves up, say, in the US or the UK. That might look like needing to hire a salesperson initially, then setting up an office or a premises. And so we can support businesses with the costs of that initial setup to expand into another country. Might also be in regards to a manufacturing facility. E-commerce businesses. So we have businesses that sell direct to consumer. You may, as part of your international growth strategy, need to stock up essentially on your products so that you can, once you've launched a website in the US, say, for example, you've got a level of stock ready to go to sell to those consumers. And then scale ups. So we see a lot of businesses that when they win large orders or contracts or projects overseas, they tend to be significantly larger than what they have done here in Australia. And so that obviously involves sometimes costs to maybe upscale their manufacturing capability to be able to deliver on that volume. So we do also support a lot of businesses who are in that scale up high growth phase. As I mentioned, we do support businesses across a range of different industries. So everything from mining and construction, software platforms, tech companies, a lot in the defense, food and wine. So just to give you an idea of the type of lending that we can provide, there's two main pathways. So the first one is our small business export loan. So this is lending from anywhere from 20,000 to 350,000. And where I see this most commonly used is by businesses that have maybe their first sort of larger international order, and they need a bit of help in terms of working capital to fulfill that order. So it might be that their staff need to work on this project, but they won't receive payment till 90 days after delivery, or they actually need funds to help them with manufacturing that level of product. And so we can provide lending against that international order, essentially. So that small business export loan, you can find all of the details on our website, but that's a great way for people who are sort of earlier on in their export journey. Outside of that, we do a lot of tailored finance solutions for our clients that have a bigger funding requirement above 350,000. There's not really a cap. I would say most of our facilities are probably around between 1 and 2 million, but some of our larger facilities, the largest at the moment is over 50 million. So there's a very broad scope of what we can do. A line of credit, if you've ever dealt with or used a trade finance or invoice finance type of facility before, it's very similar. It's there to support your international orders from your buyers so that you've got access to ongoing working capital to be able to deliver on those orders. We also do term loans, which can be used for a variety of purposes. I've seen it used for businesses that are actually acquiring another business in another country as part of their growth strategy. It can also be used for setting up, physically setting up in another country. So if you want to set up an office, you want to hire staff, and you've got initial setup costs, you can use a term loan for that purpose. And then lastly, but really important, and where we add a lot of value to our clients, is performance bonds or guarantees. So a lot of our clients, depending on the industry you're in, if you are tendering for contracts overseas, quite often you will be required to put up what's called a performance bond or warranty bond whilst you're working on that contract. Now, if you go to a traditional bank here in Australia, they will generally be happy to do that, but they will require generally 100% cash cover. So for a lot of our clients that are doing contract work overseas, having that level of cash tied up whilst they're working on a project, say for a year at a time, can be a huge impost to the cash flow of a business. So we are able to do our performance bonds for significantly less cash cover, could be between 10 and 20%. For a lot of our clients, that is the difference between them actually being able to go ahead and tender for work overseas. If they didn't have that option, they may not be able to actually bid for these contracts or do multiple ones at a time. So if you are in any sector where you are required to use performance bonds, definitely worth speaking to us. I'll just go through, I won't take up too much time, but I will just go through one of our case studies as an example. So McGregor Coxall is a client that delivers, they're basically a design firm. So think landscape architecture, urban design. They have been working on a really large scale project in the Middle East over the last couple of years. And the payment terms we see with contractors in the Middle East tend to be quite delayed. So having a working capital facility has allowed them to continue to work on that project. It just means their cash flow isn't getting tied up with delayed payment terms. So there's an example of one of our customers that we have supported. So I will just leave that lastly. So if you do want to get in touch, if you've got any questions, please feel free to reach out to either myself or my colleague Michael. Connect with us on LinkedIn. Always happy to have a chat if you have any questions. And of course, you can ask questions at the end of this session as well. All right, I will stop sharing.
Fantastic. Thank you very much, Crystal, for that useful information. And I'd like to move on now to our second speaker, Ken Croker. Now, Ken has over 25 years experience leading and growing international technology and training sector companies, and he's led business transformation, strategic global distribution, licensing, and corporate partnerships. Obviously, some really good solid experience there, some really good, your mine of information, I know, Ken. So really keen to hear your thoughts on export financing. Again, don't forget, everyone, that we have got the opportunity for questions. So at the end, we will have time. So just use the Q&A function in your chat box and we'll get to those. Thank you.
Yeah, I guess I've used a lot of financing to grow export, and without it, it would have been much more difficult, including Crystal's program extensively at Sing Machines. But today I'm here to talk about Epicor, which is a little bit of an enigma. It's national, but Canberra based, and just a little bit of the history. It actually came about as the genesis of a federal government program in the late 90s. And when the Australian government was looking to California and seeing all this amazing IP coming out of the likes of Stanford and Berkeley and Silicon Valley bubbling to the surface, and questioning how they were going to take advantage of similar capabilities. And they went to market to fund I guess, the inception of the country's original business incubators. And there was a bid from the ACT that was successful. And I think it was in 97, led by the ACT government, but led by some private individuals who are unfortunately no longer with us, but funded and backed by the ACT government, University of Canberra, Australian National University, and CSIRO. The bid was successful, set up campus on the Black Mountain on the CSIRO campus. and incubated 23, 24 companies. And the difference with today's incubators is Epicor also raised a seed fund from local high net worths and contributed to the initial funding of those organizations. And as those companies went through liquidity events, the capital flowed back into Epicor, and it's been deployed in different ways over the last 20 plus years. So it's gone from being an incubator and quite successful. There's a lot of companies that people would recognize, things like, I guess, Wind Lab, GP Sports, I'm going to draw a blank, but Coda Wireless, Locata, probably the most successful would be Wind Lab, I think. And then from there, as without being an incubator, they then provided pro bono business advisory services through Lighthouse for almost a decade as well, co-funded by the ACT government very generously. And in I guess probably 2016, 15, 16, it really ran out of money and it became a dormant organization. And then in 2017, one of the last three remaining companies did an IPO, which put some money in the bank. And so still the same ownership, still operating as a not-for-profit. We decided to start lending that money back to the local and now the national business community. And we're really I guess I would describe us as a friendly lender. We predominantly lend to companies that the high street banks wouldn't consider lending to, so relatively early stage. Three types of borrowers, really. Often it's bridge finance. Capital rounds take longer, almost always take longer than expected. So we provide bridging finance to extend runways during that interim period to not have companies taking higher risks than they have to. We lend to organizations that are trying to scale. If I had more of this, I could do more of that. And then often it's specific piece of equipment. A Three Mills Bakery, for example, buying equipment in Italy and not being able to finance it till it's landed in Australia. So giving them the interim financing, short and sharp, that they need to do things like that. There's no specific target. We've lent to, from restaurants, bakeries, egg farms, butchers, through to deep tech, computer vision and radar and everything in between, including a guitar factory. We have right now, the amount we can lend is dependent on the amount of money we currently don't have in the market. So right now, the maximum we're lending is $350,000, completely unsecured. So we take all the risk, no director's guarantees, no security of any type, which is unusual. And the things we look for, so we have some general rules and guidelines. So we don't fund hobbyists. The founder or operators of the business have to be in the business full time. It has to be a real going concern. That the business has to be, it can't be pre-customer or pre-revenue. So you have to have some customers because that demonstrates an ability to repay us. We have to have a clean bill of health with the ATO around PAYG and superannuation. And then really what we hone in on is the organization's 24-month cash flow, because our mandate requires that we recoup the money within 24 months. But we're incredibly flexible outside of that. So the repayment, almost always, we would lend the money. We allow organizations to tranche it if they want to, so you can pay less interest while the money's in our bank account. We give everybody a 3-month grace period on repayments. Nobody wants to borrow the money, then pay it back right away. So 3 or 4 months of grace period. We have allowed some companies to pay us nothing, just with a balloon payment in the 24th month. Sometimes it's interest only, or interest in principal, or intermittent payments. We are able to give when things don't always go to plan. So we have given organizations repayment holidays. And the one thing we've tried not to do is extend the 24 months, but we have done that on the rare occasion when it's been, we don't want to give anybody more pain and duress than they already have. So it's a broad mandate. The process is incredibly straightforward. We have a website, epicorp.biz, B-I-Z. You apply, you put in an expression of interest. I think there's 3 or 4 fields on the form. That triggers a presentation in person usually, or remote if required. And that you either move forward or don't. And that goes into the due diligence process. If you've ever raised capital, the due diligence is not that dissimilar. If you're in the process of a capital raise, it's a quick process. we're usually, if people are in a hurry, really desperate for the money, we've done it in as little as 2 weeks. And sometimes it's probably averages 4 to 6 weeks. And that's really about it. We get about 40 applications a year. Probably about a third of those, don't get to first base. We have a conversation over the phone and realize that the fit is wrong. They don't meet one of the criteria. Then about probably half of the remaining applicants get through and get their money. It's a two-step process: the initial meeting and the due diligence, and then a short and sharp 15-minute presentation to an investment committee, and a decision's made right on the spot. And nothing goes to the investment committee unless it's been backed by the people doing the due diligence, and nothing has ever been rejected. I think we've been asked once to tranche, and often for the companies that don't receive the money, it's not a no forever. It's usually come back when you've achieved, have 100 subscribers or have reached this milestone or demonstrated something else. And then as a added bonus, we throw in all the free business consulting that we can deliver on a Friday, or we do this one day a week, basically. So that's the Epicor story, and open for questions later on.
Excellent. Thank you very much, Ken. And we'll move now to our third speaker in this panel, Gemma Hansen. So Gemma, as I said earlier, is a consultant for Export Solutions based here in Canberra and has deep knowledge on the intricacies of Austrade's export market development grants. I know that can be a bit complex to work through, so I look forward to having that unpacked a little bit. So Gemma, hand over to you.
Thank you, Greg. I will just quickly share my screen. Now, this is actually just information taken straight from our website, which we have just recently updated with any new information on the scheme. So feel free to go to exportsolutions.com.au. Can you see that screen, Ken? Oh,
yes,
great.
Yes, we can.
Great. Okay, so basically EMDG is a funding program offered through Austrade. It is a federal scheme, and it's one of the only federal schemes that actually provides some real cash money. It's pretty straightforward in relation to eligibility. As long as you are a business that is selling Australian goods, services, or IP, generally you can look at it. You need to turn over less than $20 million a year. It is not a competitive grant. It is an entitlement-based grant, currently with $110 million in funding per year. Now, if anyone's been around for a while and has seen EMDG, you may have noticed that it has changed over the past few years, and it is currently a pre-approval scheme where you need to submit budgets and plans prior to undertaking your marketing, and then you are approved for a certain amount over a certain period of time. Now, on this screen, you will see the levels of funding that have been approved over the past few years. Tier 1 Tier 1 is basically a new business. You haven't made any export sales before, but you are export ready and about to go overseas and undertake marketing of your goods, services, and IP. Tier 2 are businesses that they have been exporting for a while, but they're just doing the same types of things that they've done. They're going to the same types of markets, doing the same types of marketing activities that they've done in previous years. Tier 3 are businesses that are undertaking a strategic shift. So they are launching a new product, launching into a new market, those types of things that generally cost a bit more money because you're taking that next step in your marketing. So depending on the amount of businesses that apply each year and the pool of funding that is available, Austrade will assess everybody's claims and determine how many people have applied, how much money do we have, how can we spread the funding. So as you can see, in round 1, which was 21-22, businesses were approved for 15, 24.6, 36.6, and then representative bodies $75,000. But as you can see, round 2, which was 22-23, it was less. The main reason for that was that round 1 businesses were applied for 3 years worth of grant funding. So businesses that applied in the first round were approved for 3 years of funding, and these were the amounts that they were approved for each year. But then when round 2 came around, we still had the same pool of funds, but we had another round of applicants. So therefore, the amount of money that was available was not as great. And then round 3, which was 23-24, those businesses got a little bit more because some of the businesses from previous years may have dropped off, or the amount of money that was budgeted to be spent didn't actually get spent. So you can see that there's not a set amount each year until applications have been submitted, reviewed by Austrade. Then you are offered a grant amount. That's when you find out how much there is. The one advantage is, in the old scheme, you used to spend your money, you'd get a refund at the end of the financial year. You were never sure how many people were applying. At least now, you have a pre-approved amount. So you know going into each financial year, this is the maximum amount that you will be getting back if you've spent your money on eligible activities. Now, the types of activities that you can claim are social media, website advertising. So in this day and age, everyone needs a website, no matter what type of product you are. If you are using that website, undertaking social media, doing influencer marketing to try and promote overseas, those costs may be eligible. If you're traveling overseas or within Australia to meet international buyers, going to trade fairs, using marketing consultants to help you with market research projects, overseas representatives to try and promote your products overseas. So maintaining those representatives with a salary, office costs, their travel costs. If you are a product business, then if you send samples overseas, you can claim the cost of manufacturing a sample plus the freight. You can also pay to bring overseas buyers to Australia if you, say, have a manufacturing facility, or if you are some sort of a produce company, let's say you're a winery. And then patents and trademarks. So registering your international patents and trademarks in overseas locations, the legal costs associated with that and the registrations are eligible. Now, the one in relation to how you actually go about applying for EMDG, it is a scheme that you can apply for on your own. You can go to the Austrade website and you can download forms. They will give you templates to help you prepare a plan to market, your budget, and submit an application that outlines what your goods, services, or IP are. You need to be able to then talk back to those what you outlined in your plan to market when you do a milestone report at the end of the financial year. So the pre-approval process means that Austrade will fund you to a certain amount based on what's in your plan to market and what your budget is that you've submitted. Then at the end of the financial year, once you've spent your money, that's when you actually get it back. So you have to be prepared to fund those activities for a full year before you get anything back from Austrade, because they won't fund you until they have reviewed your milestone report and they can confirm that what you've spent your money on is eligible. Now, a little bit of a disclaimer on that though. They do from time to time decide that they may do some prepayments. If you have heard of people getting paid upfront, it has happened from time to time, but you do still need to submit milestone reports at the end of the financial year. And if you haven't spent enough to be able to justify all the money that you have been paid, you may have to repay that money after you have had your milestone report approved. Now, another thing I will point out is, if you are approved for, say, 36,600, you need to spend double that in order to receive 36,600. The grant is actually a dollar for dollar funding program, so you need to spend at least double that to get the maximum amount back. So currently this scheme is under review. Austrade will honour any existing funding agreements that are in place. However, there is no funding available for businesses in the 24-25 financial year. So that's the bad news. The good news is it will open up again for 25-26. They're advising us that they may open up for funding applications as early as November this year. So my recommendation is get onto the Austrade website, sign up to whatever newsletters, mailing lists, or anything you can get yourself onto, so that as soon as the new funding round opens, you can get an application prepared and submit it, because the funding window, the window to supply your application will only be short. It's generally only about 6 weeks. If you miss the funding window, you will not be able to submit a late application. They do not provide any extensions. So keep an eye out for any news coming through from Austrade. Similarly, you can always ask to be put on our mailing list, and we will send out newsletters when the scheme opens, but they are telling us around about November this year, but that will not be for funding before the 25-26 financial year. So it's still a little way off, but this is a scheme that it is good to be prepared, understand what you can apply for. It is a planning process. So think about what you want to spend, think about what your goals are moving forward, start to get some plans down on paper, so that when the scheme does open up for applications, you're ready to go. You've got your ideas, written down already, and it's just a matter of submitting your plans with Austrade. So I think that probably covers everything for now. Greg. I will stop sharing.
Excellent. Thank you. Thank you very much, Gemma, and Ken and Crystal, for your insights this afternoon. As I say, we've got time for a few questions if anyone does want to raise anything. Look, there were a few things I just jotted down as questions, which I think might just be worth exploring. I guess, Gemma, your last point there about timelines for applying for finance was quite insightful, I thought, because obviously it's a long-term game, right? Building an export business. So how far in advance do businesses need to be thinking about finance?
Oh, look, I would say the minute you decide you want to start a business, think about what your long-term plans are. When you're doing these grant programs, sometimes you need to be planning 3 years into the future. Austrade, when we do your applications, they will ask for your budgets for the next 3 years. That's not always the easiest thing to put together, but know that Austrade are very well aware that plans do change. They are flexible. So even though you may put something together now for a budget or a marketing plan that you're submitting to Austrade, they do understand that plans do change. But I think businesses that plan are generally more successful. So the more further in advance you can plan, the better you will be in the long run.
And obviously, there's a lot of compliance requirements around some of this stuff. How do you guys sort of help businesses navigate the documentation and those compliance requirements to make sure they're getting it right? Because we want everyone to be successful.
Yeah.
Right?
So we have been helping businesses with EMDG for over 25 years. So we have been very much at the forefront of looking at what the changes in legislation are. We have very close relationships with Austrade and are involved in advisory panels and things around changes to the scheme. So we are very knowledgeable on the scheme and do understand what those requirements are. You do need to supply financials, so profit and loss and balance sheet. You need to be running yourself as a real business. Ken's talked about hobbyists. Austrade will fund businesses that it is not your main business, but you do need to show that you are running it as a real business. You do keep track of all your income, your expenses. You can provide those reports to Austrade. You do need to be able to show that you are export ready. You've made sales overseas, or if you haven't, you can show that you've done the proper planning, setup. You can deliver if you get a contract or a sale from an overseas business. So there is some compliance that does go with applying for any of these programs, and Austrade will review your business practices as you are applying and as you submit milestone reports. So you have to be able to produce an invoice, produce a bank statement, show which entity has paid. So you also have things like business structures where people have, say, a holding company and a different trading company underneath. The Austrade scheme is based on a particular ABN. So if you do have a complicated structure where you have some activities through one entity and you're exporting activities through another entity, that may be an issue with your eligibility with the scheme. So we will help review your corporate structure, see whether it fits in with the EMDG scheme, and give you any particular advice or hints and tips along the way to maybe help you plan for future applications.
Thank you. In terms of obviously getting the finance is one thing, but repaying that finance potentially is another. How flexible are the repayment options? What does that look like? Is it kind of negotiated on a case-by-case basis, or?
Yeah, I mean, I guess, our preference, I think what we've learned over we've been doing this lending since 2019. We understand the challenges of business all too well. We understand that businesses grow and in ebbs and flow, and so we're quite open to giving people a repayment break. But we also understand that if we're too lenient, there's a hurdle at the end that's not easy to overcome. And the other thing we also know all too well from our own experience in business and through Epicor is that if you're in a capital raise or going into a capital raise, you really have to plan around using a debt instrument before that, because no investor wants to hand over $1 million and then have you give 300 or 400 back to a lender instead of using their full $1 million to grow your business. So I think you have to go into this eyes wide open, understanding your capitalization strategy, medium and long term, and we would work with the organizations to make sure that they understood that and to help them plan that.
Okay. Crystal, more generally, what are the unique challenges you see businesses face when dealing with international clients, and how do you help them sort of mitigate those risks, or how do you see them mitigate those risks?
Yeah, so they kind of roll into one, but I would say extended payment terms. So particularly for SMEs who have, done the hard work and pitched to, an international client, and that international client has a lot more leverage when it comes to negotiating payment terms. And so I see a lot of SMEs who have won a great contract, which is going to mean their business will grow significantly in terms of what they've been able to do here in Australia. But then they are faced with the challenge of maybe, they won't get paid till 60 days or 90 days after they have delivered on their product. And so that can become obviously a challenge in terms of working capital, cash flow, and how can they finance that. And it kind of rolls into that as well as the challenge with scaling up. So for a lot of SMEs, when they do go out to the international market, the orders and the volumes that they receive from international buyers can often be significantly larger than what they're used to producing here in Australia. So to be able to then deliver on those orders and grow the business, sometimes that means, they've got to invest in plant and equipment to be able to increase the volume that they can produce. Sometimes that means changing to a different manufacturer that will allow them to scale their, manufacturing capability. So it then becomes a question of, even if they've won that contract or those orders, is how do they then deliver on those orders or those projects. So that's definitely a common area that businesses struggle with. It's the growing pains of becoming larger.
Ken, did you want to comment on that?
I do. I guess in a previous role, for the company was growing very, very quickly, and we ethic was instrumental in the company's success. And we started, what worked really well is we started with and it was for inventory purchasing. And one of the challenges is that it was not for one specific sale. So it was going to be sold through a range of global distributors held in our own warehouse in the US and in Europe and distributed. So it's not EFIC usually likes well, historically anyways, a signed piece of paper saying that these items were sold. And so what we did, we started with a relatively small loan. I think it was about $1 million. And then over the 2 or 3 years, we increased that as we demonstrated the maturity to manage that. We increased it to over 3 million for quite a few years, and it was still in place when I left. It was really our inventory financing for almost a decade.
Great, thank you. Gemma, did you have anything to add to that?
Oh, no, I don't have anything to add on that, but I suppose I just wanted to say for small businesses that are starting out, I think one of the best things is to make sure you are tapping into all the different support resources that are out there. Make sure you're speaking to your trade start advisors. Become aware of all the different overseas missions and, you know, different trade show support options there are out there with people like Austrade and your different state government agencies. When you are trying to juggle, you know, money, being able to tap into some of those other resources that Trade Start doesn't cost you anything, and they are a wealth of information. Tapping into an overseas trade mission to help promote yourself overseas reduces the costs of taking that first step into a new overseas market, and the support services they give you to introduce you to potential buyers and distributors when you are overseas in that country, that can make things much more affordable as well. So it might not just be that you're looking for funding, but you may be looking at ways that you can do things in a cleverer way. Tap into other resources that are out there, and also just speak to other businesses within your industry. What's worked for them? Because people will be doing things that you're unaware of until you start actually getting out there and speaking to other businesses. So that's probably my other main area of advice for new exporters.
And I guess perhaps Ken, just jumping back to you, when's a good time to start exporting? Because we'll start exporting and then applying for finance, because we're kind of hearing through the conversation today that actually you need to kind of have demonstrated your bona fides and perhaps have made some sales offshore before you start looking for finance to support that next phase of growth. Yeah. So it's kind of a chicken and egg situation there, right?
It is. I guess, one thing I've always loved about the ACT and being there is that, you're sort of born an exporter right away, even if it's just interstate. And going overseas is just another step. I mean, it's become a little bit more difficult over the last 20 years, but I guess the one lessons I've learned, one of the most important lessons I've learned is that, going there, trying to do business, coming back, people forget about you very quickly. And so establishing a more permanent or semi-permanent presence onshore makes a big difference. And then again, I guess a lot of organizations, or a lot of Australian companies have only succeeded in Australia after demonstrating their success overseas, especially in the defense space, quite often. And to sell directly into the defense space in the US is quite challenging. So really you have to find the right prime or integrator to work with. So there's pros and cons, but it's never too early to start. And I think, people are often lured by the size of the market, but approaching, especially the US, as a market where really it's probably 8 or 9 regional markets is a more sensible approach.
All right. Well, if there's no further questions, we might wrap it up there. I'll thank you very much to all people attending this webinar today. Thank you, Crystal, Gemma, and Ken. It's been really great to hear your views on export financing. I know I've learned a lot, and I hope our attendees have as well. If anyone does have any further questions, do just feel free to reach out to us via the chamber, and we can connect you with our panelists here today. And in closing, I'll just let you all know that we are hosting the Canberra Business Chamber annual Diplomatic Connections Gala dinner on the 3rd of May. So anyone looking to make international connections we'd love to have you along. So please do just check out our website, canberrabusiness.com, for tickets. So thank you very much, everyone, for joining us today.
Thank you.
Thanks.
Thank you.